From an agnostic skeptic to an outright bull.
Recently, Jim Cramer has become a bull in Tesla. And this is strange because, come on, Jim. You were a bear in Tesla when Tesla went down, but now you're suddenly a bull after it goes up a lot. So I'm going to show you guys the history of the relationship between Jim Cramer and Tesla. And you guys can decide whether this guy is just a hype rider. So their interaction starts in 2010, where Cramer takes a shot at Elon Musk, and Musk does the same back.
What do you say to the skeptics who look at where Tesla is, the money that you're raising, and they say, you know what? They've got a nice roadster, but they don't have a good business plan.
Well, I think, Jim, I'd say, yeah, sure, Jim, we're no Bear Stearns, but I think we're going to do okay. Jim, I think, recommended Bear Stearns and Lehman and other things. So, frankly, he's a contraindicator.
And now, 2013, this is the iconic moment when Cramer constantly bashes Tesla stock over the long term. Essentially, in this video, he says that you should cash in on Tesla on the IPO boom, but sell right after because Tesla is a terrible company for the long term.
He's talking about one of the most hyped IPOs in recent memory. The soon-to-be red-hot Tesla Motors, which will trade under the symbol TSLA when it comes public next week. I think Tesla will be a fabulous IPO. But I want to make sure all you home gamers understand the difference between a red-hot IPO and a red-hot stock, so that you can benefit from the initial fire without being scorched by the flames after this baby comes public. See, Tesla's an electric vehicle maker, and I think this space is all sizzle without any stage. Sell. This deal is a great way to make a quick buck or two, which is why I advocate trying to get in it. But long-term, Tesla is cell block material, and you're going to hear it some Thursday coming up. That's why I'm doing a very special cell block today. You get shares in the IPO. You want to sell them after the initial pop. Do not hold them for longer than that. I want you out the first day. How can I like this stock on the IPO, but not like it as a longer-term vehicle? Isn't that a little two-faced, duplicitous even? Nope. And I'll explain why. The hype factor here is overpowering. Tesla, which designs, develops, and manufactures high-performance, fully electric cars, along with electric power, the train components, the powertrain components, has a stock that's every bit as sexy as its signature. And the only vehicle in the market, the Tesla Roadster, that can go from 0 to 60 in 3.9 seconds with no tailpipe emissions. Now, look, I concede the IPO is going to be huge. Money managers are always on the hunt for a green tech story. And Tesla, which makes cool cars that don't need gasoline, that plays right into the theme. Plus, don't forget that with GM and Chrysler out of the public equity markets and Toyota still reeling under its sudden acceleration recall overhang, investors in the U.S. just don't have many ways to own an automaker. The only real play right now is Ford, and as much as we like that stock, especially the Ford Preferred, it simply doesn't have the sex appeal of a Tesla. This is a seductive IPO. People are going to hear that Tesla is the best positioned company to play the fully electric car market. How much does President Obama like that? That its roots in Silicon Valley lend its electric engineering and software expertise, that its proprietary systems integration of vehicle and electric powertrain technology give it a huge edge over any competitors. And it's got one of the hottest brands around. Let's just face it, right? I think all these things will lure people into this deal. I also like the fact that Tesla has a good pedigree. Goldman Sachs, Morgan Stanley, JP Morgan, lead underwriters. Remember, in Getting Back to Even, which is the ultimate handbook for this incredibly volatile market, like horrible days like today, I tell you that it's important to examine the brokers who bring a company public. And you can't do much better than those three. Now, in terms of pricing, Tesla says that they're going to sell 11.1 million shares at between 14 and 16. That is going to be raising $167 million. Now, listen to this. At the midpoint of the range, this is going to be a $1.5 billion company. That's a lot. And I think if it actually prices at 16 or less, then Tesla will be exactly the kind of underpriced IPO, even though it's got that big market cap, that the brokers use to lure investors back into the casino. Again, described in Getting Back to Even. One that gives you a quick gain in order to make you feel better about investing. And can you feel any worse than you do on a day like today? So if you can get shares in this deal, I would take them and use the hype factor for you to turn a quick profit. But after it comes public, listen, Tesla's a sell. You don't want to own this stock. You don't want to lease it. Heck, you shouldn't even rent the darn thing. We just want you to take it for a test drive on that IPO and then bring it right back to the lot. Why? Because beyond the hype, there's just not much going on here. Tesla still has yet to turn a profit. That'll be a $1.5 billion company with no profit. Its most recent quarter, it actually lost more money than it did the year before, $1.5 billion, losing more money than the year before. This is a company with limited visibility. And just like when you're driving, limited visibility, let's call it dangerous. The electric car business may have a ton of sex appeal. But this industry is still in its early stages of growth and could take a decade, maybe more, before it comes established. As of March 31st, this $1.5 billion plus company, it sold 1,063 cars. I myself have sold 1,063 cars. In 22 different countries, I've only done it here. And these cars are pricey. They're $100,000 a pop. Hey, the BMW 750, cheaper. Not something that necessarily works in a market where unemployment is sky high. Now, Tesla's coming out with a less expensive model. It costs 50,000 smackers. That won't hit the market till 2012. So you'll be waiting a long time before that catalyst kicks in. And any delay, it's going to crush the stock. They'll report quarter after quarter that you won't like. Plus, Tesla is a company that relies on federal support. And the current $7,500 federal tax credit for alternative fuel vehicles may not stick around, given Washington's need to trim its enormous budget deficit. If a company feeds at the federal trough, we can't count on it in this environment. The same reason why we don't like the solar stocks here, even though oil's come back. Also, we got to be very wary of competition. Other companies are developing electric vehicles, many of which I think are better and less expensive than Tesla's Roadster. Hey, upcoming Nissan Leaf, 25 Gs after tax savings. Most important of all, though, Tesla's not the first electric car play to come public. Listen to this. This is where we got this negative. This is the coup de grace. We have a precedent. Remember A123, which makes lithium-ion batteries for electric vehicles as well as storage for the electric grid? I think Tesla will have the same trajectory as A123, which we told you would have a great first-day pop when it came public, but then would be a dud afterwards. And that's exactly what happened. A123 priced at $13.50, then opened up 26% to 17, closed that day at $20.29. Nice gain, right? 50%? But the stock has come down huge since then. It's off 67% from a high of $25.77. It's $8.57. We're invoking the same corollary we used on the A123 for Tesla. The one coined by investment sage Steve Miller. We say, take the money and run. The bottom line, learn from your stock history.
Now, in the period from 2013 to 2018, Jim Cramer goes from a bear to a skeptic. He's now sitting on the sidelines, and he constantly calls Tesla a cult stock. He really wants to get a Tesla car, yet for some reason, he won't touch the stock.
You called it a cult stock last week.
Yes.
So
I said stay away from, don't short cult stocks. You can't.
Okay, well, and the shorts are down. They had been at 30 million. Now we're at 27 million on the shorts. So,
But, look, I mean, I want to buy one. I want to buy one.
you wanted to buy one, but they told you you had to wait 9 months.
But
and
not
you
anymore.
said-
Now it's a 3-month wait. Some people say only a month wait for certain models.
All right, so let's get back to the stock because here we are. I mean, is this a $100 stock? Are we gonna hit $100?
I mean, what I always like to do is know my own limitations. Like I can value Google, but I can't value Apple because Apple's earnings are in decline. There, I can just say it's got a dividend that's going to prop it up eventually. Amazon and Tesla, I can't value, and I think that anyone who claims they can value them does not understand the mechanics of the market, which is that as soon as you had that equity offering last night, the shorts came back. I mean, I'm sure that we'll see a spike up in short interest. The mechanics of the market don't allow you to be able to figure out how to do it because the shorts are constantly covering. Amazon's at 200 times earnings. You can't value that because what happens if they stop spending? It immediately maybe goes to 15 times earnings. Who the heck knows? So, you have stocks that can't be gamed. They are just unfathomable. They're unfathomable.
You have to be a quick finger then.
Right. I mean, I don't have an edge. No one has an edge in this short. No one.
All right, so there you have
No one has
it.
an edge in the short.
Jim's saying he's actually a fan of the car
Yes, I am.
and maybe getting back on that waiting list. But if you're looking at the stock, be forewarned, it's got a lot of risk in it, and you need a fast finger if you're going to trade Tesla.
It seems every day we're getting good news about Tesla, whether it's the earnings or the consumer reports giving it almost a perfect score. Well, let's talk about Tesla. I'm with Jim Cramer. So, Jim, you know, they came out with their quarterly earnings, definitely surprised the market. Right. They delivered 5,000 Model S cars. The market was not expecting them to come in with profits, and yet they did. The stock is becoming a trader favorite.
Right. I mean, a huge percentage of the stock is short. There are people who send me bulletins constantly about why I should tell people to sell Tesla and why I should tell them to short it. And I don't communicate those because this is a cult stock, and I don't want to mess with cult stocks.
Tesla, what are you looking for there?
Tesla's a cult stock. There's nothing to look at. The people who love Tesla cars buy the stock. There's nothing to do. This was a hilarious conference call, frankly. I mean, only could a guy have $1 billion negative free cash flow, declining gross margins, $16 billion in debt, suddenly departing CFO, and everybody's like, hey, at one point the stock was up big. The conference call starts with Morgan Stanley's Adam Jonas asking whether he's going to leave to be the leader of the plan to put a man on Mars.
Or maybe those 7 new planets they just found.
Seven new planets.
One, yes.
40 light years away.
But then, of course, what happens is you think, all right, he's going to raise capital. Now, what he puts it is like, he says, listen, don't want to get to the edge. But they did 6.5 million shares at 215 back in May of 2016. You're up 70 points. So it was one of those conference calls where I just found myself saying, Bezos did not have the guts to do this call. I mean, he had a lot of guts, but not this one. Right in your face. I mean, it's like, there was a UAW, yeah, bring them on. We have the best benefits of all. Those subsidies, forget it, man. GM needs the subsidies more than we do.
But unlike Amazon, I would argue, the calls here are more polarized. You got Ron Barron saying you're going to 4x your money by 2020.
Yes.
We just had one firm reiterate their 160 target. Remember that last week?
Yeah, well, look.
And you've long said it's a cult stock.
It's a cult stock. It's really hard to figure out what it's worth. I mean, if he makes 500,000 cars, I mean, at one point someone says, aren't your gross margins going to be bad on the new cars? He says, they're going to be horrendous. It remains a battleground stock that I cannot have an edge on. It's the only one, by the way. I mean, I'll tell you to buy Amazon. I have no problem telling you. It's a cold stock, but it's also got a web service business that is worth maybe a huge part of the market cap. But Tesla is just a battleground, and it's great to watch. It's terrible to be involved in.
Now this is where Jim Cramer becomes a bull. And it really is quite strange seeing him as a bull after he's been skeptical for so many years.
Now, we're going to start with Tesla because I need you to understand what converted me from an agnostic skeptic to an outright bull. About 3 months ago, my eldest daughter got a chance to drive a Model 3 from Oregon to San Francisco. She just sold her beat-up used Ford, she's definitively non-car person. I know she felt trepidation about the battery and the 600-mile trip. But within the first 100 miles, she called me. That in itself is exciting. To tell me how much she loved being behind the wheel of the darn thing. She's never, ever expressed even a whit of interest in any other vehicle. Now she's bragging about driving a Tesla. I told her that I'd driven one years ago and loved it, but never thought that much beyond that. She had 2 words for me. Buy one. She took down all the features she liked, especially the widescreen, but nothing mattered more to her than the flatulence button, which she thought was hysterical. About 2 months later, and I too found myself on the West Coast with my wife and another fabulous husband and wife couple who could not wait to put me in the Gullwing Model X. My wife, Lisa, loves cars. Oh boy, is she ever a car person. She'd be crazy. And she was immediately smitten. Now, I have to admit, I love the whimsical nature, the handling, the Gullwings were cool. The drive was fantastic. And it was the Gullwing Tesla, and I just said, that's it. That's it. I'm a bull on Tesla. I've decided that my life on Twitter is easier. I don't want to defend them, okay? I don't want to defend against them. So they won. All right, first time anyone just say, I'm defeated on Twitter. I'm using a $52,000 price tag. David, $63,000 and you're done. Just say her. Yeah, I mean, she wants an X. You can't stop her. She loves cars. She wanted a 94 Range Rover. We went and bought it at Rolfson Summit. She liked the Mini. We got the Mini, and this is the new thing.
But it sounds like you're on board, too. This is not just Lisa, right? You're kind of a convert on the whole thing.
She's the driver.
Right?
She's the driver. I have to admit, it's just an unbelievable experience. We're with some people who had 2 different ones this weekend. And you know what? I thought when they threw the rock at it, and it went through that would be some sort of sea change. No, all it did was encourage more. I know they're refundable, but you know what? I give up. I mean, the car's too damn great.
He threw in the towel. I never thought I'd see the day.
Unbelievable. Threw in the towel.
Did Elon
threw in the towel because my
did
wife
Elon
told me enough
reply
already.
to your tweet?
No, it doesn't matter. I'm going for this thing. I can set up. I don't need him to set up the test right in front of Broad Street, which is where we want to do it. It's time to do apples to apples, but you can't fight your wife, your spouse, your
Smart
kids.
man.
I'm on going back and forth with my daughter in Spain. She goes, Dad, it's about time. My daughter in New York, it's about time. That's enough. 2 daughters. I mean, what am I going to do? Just continually just look at the balance sheet? Amen. I can't take it anymore. If everybody in my family wants one, I'm done.
Well, now you
I can't fight this. I can't.
And you've got Tesla above 500 for the first time.
Yeah, I mean, we spent a lot of time just now with Jim talking on the Mad Dash about Tesla and about that increase in price target at Oppenheimer. But the stock's gone almost parabolic at this point, up, as Carl just said, roughly 5%, backing off the highs of this trading session so far, the first 5 minutes. Its market cap is over $90 billion. But Jim, that $10 number that you mentioned for 2021, which I guess is out there in print and some analysts, certainly got my attention.
Well, it should, because we were supposed to be worried about the balance sheet. If you have $10 per share, what the heck? Who cares about the balance sheet? That's never talked about. Elon Musk, I know he danced a jig, but you know what? He's not dancing a jig in Twitter. The guy has become kind of he's a statesman. And I know from someone who is not a statesman that this guy really is he is the new face of an auto executive, which is that your car becomes an exciting place to be. Remember when Howard Schultz used to call Starbucks, which, by the way, suck in the airports, he used to say, you know what, Starbucks is the third place? Your car is your third place. I love sitting in a Tesla. And my daughter loves the flatulent seat. She kept sitting on it, pressing the button. I mean, I know it's a little odd, but the Tesla is the place. It's the third place to be. People love to be in it, and they've got autonomous driving. Oh, my, it's so exciting.
I do feel like this video is going to get taken down, copyright striked. CNBC, Jim Cramer, they don't want you to see this. If you enjoyed this video, please like and subscribe. And with that being said, I hope you enjoyed this video.